What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the overall market, SPY, QQQ, and a couple of stocks out there, and break down some very important information about CPI and how it may affect many different stocks. I'm going to break down what could happen tomorrow, what levels you have to watch for during the big report, when it's coming out, and why this is going to be very, very impactful for the whole market, causing a crazy surge in volatility. Before I break anything down about this, though, before I say anything about the information coming out for tomorrow and why CPI is going to be so massive, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed up to 10 free stocks, each worth up to $2,000, and any could be a free Tesla share. The offer ends in just a couple of weeks. Check it out before they run out. With that out of the way, let's get on with the video. So SPY is down about 0.44%. I did make a prediction that we would likely see the market cool off a bit. Now, I want to apologize to you guys about some things that happen on this channel. There's sometimes days where it may seem like I'm a little bit all over the place because I tend to make these like very sudden changes sometimes, and that oftentimes happens because of how volatile the market is. Sometimes unexpected things could happen, and that could lead to different signals that completely flip in just one day. And let me show you exactly what I'm talking about. I mean, if you look back on the charts over the last couple of days, just look at this volatility on SPY. It has been just insane. And for the most part, I have been right about most of my predictions. I'm not always 100% correct. Nobody is. And that's why I want to make it clear that we have to be very careful and very open minded in a market like this. Now, if you look at SPY, I mean, this thing just ripped to the upside, came down a bit, pushed up, came down, pushed up, came down. It's just all over the place. And going forward, and what happened just like yesterday, the market formed a lot of bearish signals for today, and that's why I did predict we'd get a sell-off. In my video from yesterday, I told you SPY would retest about 410. We'd see Tesla down to like 166 or so. We'd see the QQQ sell off a bit. The QQQ actually did not sell off as hard as I thought, but it did sell off and close red as predicted. And the market did just chop around a lot and come down right before CPI. Now, on the 4-hour time frame, you can see the MACD is losing a lot of momentum right here, and we're seeing lots of signals suggesting that the market is weakening. We also closed very close to, if not below, the 50 EMA on the 4-hour time frame. On the 1-hour time frame, we're just barely holding on to the 200 EMA, right? So we're below the 50 now, but we're above the 200, which is the next major support zone. But what you'll notice is on SPY, there is this channel that we're sort of stuck in, going back and forth and back and forth. I did predict that this would continue to happen and we'd close like near the bottom of it. And now the question is this about to form like a giant bull flag? That's a real possibility, right? It is still possible that we get a big push up after CPI. It's also possible for the market to get a rug pull and come crashing down. Now, I'm going to break down what I think, and I am more biased in favor of the bears, of course, but I'm always open minded and I'm always properly hedged during big events like this. So for SPY, I'm holding both calls and puts. I have an equal weight of them so that no matter which way the market moves, I could still come out on top, and I should, as long as we get a very volatile move. And I also have longer term options simultaneously so that I'm not just trying to gamble with 1 day to expiration options, because they could be more subjected to IV crush and this big drop in implied volatility, which could kill the premiums of the options. But anyways, now let me just break down CPI and then talk about what I think is going to come. Just so you guys understand this, be prepared for anything. But I personally think downside is more likely in the markets very, very soon. I'm always open minded, of course. And let me break down one of the main reasons why I believe that. To be blunt, I believe there are going to be many CPI reports coming out over the next few months, of course. And I believe at least one or two of them are going to be hot. And I don't know if this next one that's coming out is going to be the one that's hot, but I do believe there's a good chance that that's going to be the case, or at least it's more likely that one of the metrics will be kind of hot. Now, for Wednesday, be ready because CPI and core CPI are all coming out together 1 hour before the market opens. This is massive. The market's going to make a huge move because of this. It's going to be huge. And in doing so, many different stocks will be impacted. Tesla's going to be impacted, the QQQ is, and NEO, all your favorite stocks, AMC, whichever stock you want to trade, if it's UPST or whatever, they're all going to be impacted by this. Looking at the data historically, we've been seeing CPI cooling off, at least on paper, and this does not mean that CPI is going to zero or CPI is reversed or prices are getting cheaper. All this means is the rate at which prices are increasing is slowing down. So instead of prices going up at a rate of like 10%, like back in June of 2022, now they only went up about 5% according to this data for March of 2023. But here's what's important. The purple line right here is showing a downtrend for core that has been broken, or at least there's some signs of it breaking, and we have an uptick in core CPI. This means that if you exclude food and energy, prices are starting to go up again. And what tends to happen is during the summertime, as we approach the month of June to July, we tend to see an uptick in inflation. We had some very negative news involving OPEC not too long ago about how they're going to be like cutting production. That's going to lead to more inflationary measures. And this is making the Fed, of course, very, very cautious. Now, for expectations, like for tomorrow, we're expecting basically almost the same thing as what we got for March. And just so we're clear, we're still near the middle of May. We're still very close to that period. So the data is coming out for the month of April, right? This is delayed data. It's coming out for April. That is why you have to be ready. The data from March is what we're comparing this to. The expectation for year over year for CPI is 5%, which is the same as what we expected for March. For month over month, it's a 0.4% increase versus March's 0.1% increase. For core, we're still expecting, excuse me, sorry guys, we're still expecting core to be relatively hot, 5.5% versus the 5.6% for March. And then for core inflation month over month, 0.4% versus 0.4% in March would be the increase. Now, if we get something hot on either end of these, this could have a negative effect on the markets. If CPI is up, the headlines are going to turn very negative, and that is going to be very, very impactful. However, here's something else that's important. If core itself is like hot and something else is reacting in that manner, that will also have a ripple effect because core is also very, very important. So if it's cool, right, the market's going to pump up. If it's way too hot or even a little bit hotter than expected on either end, it's going to cause the market to react negatively. Now, what else is worth noting is that according to some important surveys from the Federal Reserve Bank of New York, we're expecting an uptick in inflation. Many Americans are expecting it. This tends to incentivize more people to spend more money. And in doing so, we are seeing an increase in the 3-year ahead horizon to 2.8%. And we're also seeing the first increase since October 2022. So people are becoming, excuse me, sorry guys. People are becoming more and more concerned. People are becoming scared. And people are more likely to spend more as the summer comes and spend more because of the fear of prices going up even more. This is almost traumatizing Americans. Americans are just panicking right now. They're losing so much spending power. And there have been a lot of reports talking about how food prices from like sugar to olive oil and many other commodities are just increasing more and more and more. So honestly, guys, I would be super, super careful with this. It's just not good to see anything like this. And I find it very suspicious how Jerome Powell mentioned a Fed pause like a few FOMC reports ago. Powell was saying, oh, yeah, a pause could be coming soon, right? He mentioned that a pause is possible, disinflation was coming. Remember that? A few months ago, he was saying all that. And the market ripped. It ripped to the upside when Powell was using that language. And then Powell also mentioned that the Fed is going to be reactive to data. He's been saying that consistently. But during the latest FOMC meeting, Powell said nothing about a pause. He simply stated that we're going to look at the data Whatever happens, happens, and the Fed is going to be reactive. He also did not use the word disinflation, or he did not say that disinflation is clear right now. There's a very brief change in his tone. And I wonder, could it be that Jerome Powell and the Fed know something? Could it be that they know CPI is about to uptick, or they know we're about to get something very bad for everyday Americans? Could that be why they never announced the pause? Could that be why they're not as confident in pausing very soon? Because if we get another big uptick in inflation, which is very likely, the Fed may have to continue raising rates more, or they may end up doing it. They may give us more 25 basis point rate hikes. And this is similar to what Paul Volcker did with more and more of these rate hikes. And I just don't see this as something that's going to help the market pump. It's going to cause the market to get rug pulled. Now, on top of that, gas prices are up about 18 cents relative to the previous month. And this is the average retail gas price for the USA as a whole. And then food inflation has been dropping a bit, but it does tend to increase near the summertime. So I'm very, very cautious, of course. I'm going to be very careful. What do I see happening to the charts right now? From a technical standpoint, SPY is getting weaker and weaker on paper. There's also a possible inverse head and shoulders like formation. If it's bound to play out, then we could see a bigger decline, of course. But there's no guarantee, because we could also argue that there's this potential like bull flag, and this could be a slanted head and shoulders, inverse head and shoulders, sorry, and then the right shoulder is already done developing. So there are two arguments that could be made. Okay, if you're bullish on the market, SPY is going to break above 414 and make its way all the way up to about 417. Right, shortly after CPI by Friday, that's going to happen. If we're bearish on the market, if CPI is hot, SPY is going to come crashing down to 408. If that fails, 405 is going to come pretty quickly. And there's no guarantee that's going to hold, because 405 support is nowhere near as strong as like the 403 area. It's more likely that if we break below 408, then 403 is going to come. And that's going to be a big drop, unfortunately. But what do I think is more likely? That's the biggest thing you have to consider. Based off the data I'm seeing, there are lots of signs that an uptick in inflation is coming. What I just don't know is if it's going to be this one or the next CPI. The CPI after this one, so the one coming out in June, one of them is going to be hot. It's very likely, it's super likely we're going to get a hot CPI again. And my gut's telling me it might be this one. We might see a slight uptick. Maybe nothing too like extreme, but a slight uptick that leads to more downside. So being open to any possibility, I still believe it's more likely we're going to see downside. That's where I'm like leaning. I'm obviously properly hedged for this event, but that's just my opinion, and that's what I think is going to come. More downside for the markets. Please be ready for this. There's going to be a lot of panic if that is the case. Now, Tesla's a little bit different. Tesla has a potential bullish divergence developing, but remember, it's developing. There's no guarantee it's done. If CPI is hot, it could invalidate this and just continue to drop back down to the 160. If CPI is okay, we could see Tesla push up to fill the gap at 178. I'm leaning, once again, I'm open to any possibility, but I think it's very possible for there to be more downside. And we could see Tesla retest 163 to 160 very, very soon if that is the case. For Coinbase, I mean, this thing's holding up so far with some relative strength, but a hot CPI would cause this thing to drop. There is a bearish divergence developing so far as of right now. If we get a rejection, we start pulling back, expect a more dramatic pullback because of this bearish divergence. And CPI is going to tell us what actually happens. If we get a good CPI, Coinbase could fly to 62. If not, it's going to make its way down to 54, if not lower. The dollar is only up 0.26%, not really doing too much, just chopping back and forth and back and forth. So we'll just have to wait and see how that goes. For NEO, if we're bullish on NEO, it's going to hit 8.5. If we're bearish, it's 7.5. I'm once again leaning a little bit more bearish, but I'm always open to any possibility, of course. But that's just what my bias is. We'll see if I'm right, because what else is interesting is the quote-unquote smart money or the bonds traders. They're selling right now. They're continuing to sell. They've been selling for the last couple of trading days. There was this pump just a few days ago, but look at the last 2 days. There's been a lot of selling pressure. It could be because they're just not wanting to hold too many stocks or as many stocks approaching CPI. It could also mean that they know something. It's got to be one of those two. I would be careful because of that. My target on Microsoft was a little bit of downside. It would approach like 306 to 307. We did see Microsoft do that, but there's not much going on the RSI or the MACD. It's just very flat. It's going to react to whatever CPI brings. 310 if we're bullish. If we're bearish, it's going to come all the way down to 303, if not lower. I'm open to anything, but I am leaning more bearish for the price action. For the triple Q, this is interesting. We have a bearish divergence that developed basically. If you look at the price, this developed yesterday. Then we got the downtrend, which I predicted. But so far today, we actually held the 50 EMA. We didn't really break below it too hard. Because we're holding this opens the possibility of it trying to bounce off here. Or if it fails, it's going to retest the 200 EMA, then break below that, make its way down to 315. In my opinion, we barely saw any downside on the triple Q, and there's not really a bearish or bullish divergence developing. I'm not really seeing it. So it could really go either way. I am leaning a little more bearish, though. I know it has these gaps above, but there are also some gaps below. I think we're going to get an uptick in CPI soon. I think this will affect us. For the VIX, I think this thing's been undervalued for quite a while. It is chopping around quite a bit. There is this gap up here. If it does hold the 17 area and it starts pushing up, it could fill this gap and get its way up to about 20. If that's the case, there is a case that could be made for like a head and shoulders like formation. And if it pushes up to fill this gap, it's going to be because of the market dropping. It still is very possible, and I am still leaning more bearish for the market. I don't know for sure, guys. Let me just make that clear. That's just what my opinion is, and that's what I'm thinking based off the data. SQQQ pushed up as I predicted. We had a bullish divergence. Now we're just going to react to CPI. Aapl came down to my target of about a little bit above 170. It did come down as I predicted. There's not much of a divergence forming as of right now, and it could actually drop more looking at this MACD. The 4-hour time frame is telling us the same thing. The MACD is looking more and more bearish. If Aapl does get dragged down hard, it's going to drag the market down with it. For Aapl to turn bullish, it needs to break above like 175. If we get a bullish report, it's going to make its way back to 174 to 175. If it's bearish, Aapl is going to retest 169, come all the way down to 168 and 166. That's going to be bearish for the whole market. The 10-year treasury yield is kind of flat right now. That is very interesting to witness. It has two gaps below, but there's also a gap above. It's very indecisive because of CPI. It fills this gap that would typically be bearish for the markets. So far, it's indecisive. All right, guys, so that's what I have for this video. I truly don't know what's going to happen, okay? But I am leaning a little bit more bearish. And I believe strongly that at least one or two of the next 3 CPIs are going to be hot. One of them is going to be hot at the least. And you have to be prepared for this. You have to be prepared for how this will affect the market and also the Fed's policies. Thank you all for listening. Have a great day. Market to the moon as the long term is very bright. And peace out.